Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday Halloween edition of Benzinga's Pre-Market Prep. I'm Spencer Israel. As always, I'm joined by Joel Elconin and Dennis Dick on the show today. It's mostly going to be earnings, but we have one big headline we got last night from the Journal about Apple and their use of chips, specifically involving Qualcomm and Intel. So we'll discuss that right off the bat. Our guest today will be Nick Shaheen. He joins us every Tuesday at 8:35 to talk through his favorite option trades of the week. Joel, what's going on in the markets today?
S&Ps are up 5 1/4. Kind of had a weak close yesterday, but found support above Monday's low. That was 65.5. That's our key on the downside. Now on the upside, just near the pre-market high, that's 73.75. We have Monday's high at 78.5, as well as our all-time closing high at 78.25. Those are the levels on the upside. We have crude in the red by a nickel, but hanging up here near $54. Gold and silver in the red. Gold in the red by $3.50. Silver in the red by a dime here at $16.84. Dennis, earning season continues.
It does, but you know what? We have some non-earnings news here, and I, like Spencer was previewing on the show, I think I want to start with that, because it is moving 3 stocks here. Well, really 2 stocks. Apple came out last night. Well, actually, the Journal came out with an article about Apple saying that they are potentially going to cut out the Qualcomm chips from the iPhone and the iPad and go with Intel. That's why you're seeing Qualcomm get crushed here in the pre-market, down $2.41, and Intel's actually having a nice rally, up over 1.6%. I mean, Spencer, this lawsuit's been going on with Qualcomm and Apple for years. I'm surprised it didn't cut Qualcomm out before.
I'm not even sure how long the lawsuit's been going on for between Qualcomm and Apple, because it feels like it's been a few years. But
yeah, you see a headline pop up like every 6 months about it, but I feel like I've been seeing that for years in the pro.
Right. So first of all, we should say this is just a reported planned move for next year. This is not Apple saying we're going to. Of course, Apple never says anything, but like Apple isn't saying here we're not going to use Qualcomm chips anymore. We're only going to use Intel. They're not saying that. This is just a report from the Journal that it could happen next year. So that's something to keep an eye on, specifically with their iPads and iPhones. But yeah, moving on from Qualcomm, moving all in on the Intel train apparently.
Yeah, and the stocks are pricing in like this is a done deal because Qualcomm obviously getting hit. It was down 5%. It's only down 4.3%. It's coming off those lows a little bit. And Intel with the big pop here. Now we're $45 a share here. Qualcomm is due to report here coming up. Is that tonight, Spencer? When is Qualcomm report?
Ooh, good question. You know what? Qualcomm wasn't even on my radar for earnings, but let's take a look.
Let's go check out when they report. I think it's coming up.
Qualcomm's due to report tomorrow after the bell.
Tomorrow night. So interesting. I'm just saying, and we'll see how this, goes through in the next 2 days. But remember, Celgene had the bad drug news. Then they got hit. Then they report a couple days later and they hit them again. I kind of feel like this could be the same deal. I mean, Qualcomm, nothing to do with Celgene. I just feel like you got the bad news, the stock is down. Now you have people, now that, if they come out and the earnings aren't great, I think they could hit the stock again there too. I think this is not good news here at all. 4.36% dividend in Qualcomm. And, you look at it and you think, oh, there's some value there. But, man, this has just kind of been a value trap for a long time. It's come off the lows it was from September, but I don't know. If Apple's cutting them out, that's kind of scary to be a shareholder, no?
Better places to put your money. 50-50 is your pre-market low, right, Dennis? But we're
off the lows.
Yeah, we're off the lows by $2. So I'm going to hazard a guess that we got the low in just because, what if you're short this thing going into the report? You get some bad news like this. You get a nice whoosh down after finding resistance. I see. So I'm thinking $2 off the low. I think you fight and get your way back there. There's a couple additional lows to keep an eye on. One at the psychological $50 level. $49.91 was your 9/11 low, and then that low that you had in earlier in the year, the low of the year 48.92.
Jump over to the Intel train here, and obviously, this has really depressed me. It's been straight up since I sold the stock. I should not have sold it. The only reason I sold it was there was this report from analyst there, was Rosenblatt, I read, and this was after the Tesla AMD fake news, and they were saying that this is kind of the last straw for Intel, basically, and that AMD it kind of implied that they were eating their lunch. Apparently not the case. AMD's been straight down since then. Intel's been straight up. I flipped over. I should not have done that. And obviously, I've been depressed about it ever since. Complained about it yesterday on the show. This is the last time I'm going to complain about it. But here's Intel, INTC trading up another 70 cents. And I sold this thing at $38.
Dennis, I'm really surprised you flipped like that on an analyst call.
I usually do my own research too. Because I'm a chartered financial analyst too. Like I went through the whole thing. I sit there and crunch the numbers. Sometimes how I figure stuff out. But I read somebody else's research and I was like, you know what? They got a point here. And the Tesla, and that was actually before. That was the night where the news hadn't, actually not been fake yet. The AMD Tesla report from CNBC. So I got hit there too because I was like, oh, this is Tesla going with AMD. This sounds great for AMD. That obviously turned out not to be true. So I got hit on that as well. So I made a decision based on fake news. Fake news hurt me.
45.19. It's all about 45.19 and Intel. That was the high from yesterday's session, that being Monday, and just inching up there in the pre-market. So got a little seller there, haven't taken up a high, really 90 cents off the low. So that's off the close. That's a big move. You had a double close at the 43.37, 44.40 area. Don't think we're going to get back down there. And then once again, you can look at your daily chart and you can say, oh boy, this is so overdone, $45. But then you go to your monthly chart and look at that. Maybe the party is just getting started. You did have a high. Wow, when was this? 47.88 back in November of 2000. Potential target there. And also $50. I mean, we've come this far, this fast. Why not aim for $50?
I mean, you've got value here. This fit all the descriptions of a Denny stock. You get a nice little dividend, PE's like 13 or 14. That's what I like. And now you're getting some growth with it too. Now, Apple might go with it. I mean, there's no reason not to own this thing. Only reason is now that you're chasing it. And it's up from $34 a month and a half ago. And this is Intel. And this is an absolutely huge move for them. But this market has actually been paying you to chase stocks. I mean, look at Square. Square keeps going up every single day. I actually had it overnight. I still got a little bit of shares here, but it seems like this thing just goes up every day. And I keep playing it from the long side of my day trading portfolio. I guess I should have just thrown it in the investment portfolio and not worried about trading it so much because it just goes up every day.
All right, for the Square, you got a little excited in the pre-market yesterday. You got the 36.48. But the more relevant number here, you are trading up in the pre-market. Over the high from yesterday. So look for that old resistance to be new support, perhaps. Went off the board at 36. Where'd you close? 35.75. So if you get back down there, that was right near the high of the day. Old resistance, new support in Square, perhaps.
It's been such a monster stock, and we've been talking about the buy imbalances we see there every morning. There'll probably be one there again today because it's already trading up 40 cents. So maybe somebody's just anticipating, or somebody's got the memo on the imbalance. But it's probably just anticipation. I'm long it too because I'm anticipating there's going to be another buyer here in the morning because he seems to be there every single day. So it's not rocket science. Baba trading up there too, and probably I haven't even looked at General Electric. It's probably trading down. Oh, no, it's actually a good day for GE. It's trading flat.
Dennis, let me know when you dump that thing. Let me know.
That's going to be the low. When I sell out of GE, and it's been my investment portfolio for 17 years, when I sell GE, that will be the bottom. I'm telling you, that will be the bottom. Just like I sold the bottom in Snap. That was a day trade, actually, but it's still, I hit them. I'm still proud of myself for selling that 11.28 low in Snap.
Can you imagine getting back to the flash crash low in General Electric? Who would?
It's almost there. What was the flash crash low?
1937.
Oh, we're going there. I mean, they're going to cut the dividend. We know that's coming here. And okay, you can say, oh, maybe it's priced in, and maybe a lot of it is, but I don't know. People don't like dividend cuts. I mean, it's coming for Macy's too here. Don't kid yourself. Macy's now under $19. I've been talking about the dividend cut in Macy's for a long time as well. It's over 8%. That dividend is not safe, I think. And, here's an argument, and they were giving this on Fast Money last night. They've been talking about the real estate. And, well, you got $6 billion in real estate. This was the argument of Fast Money last night. You got $6 billion in real estate. The market cap's only $6 billion. Why? It's kind of like, you're getting the real estate here, the whole rest of the company for free. That was kind of the argument last night. Do you know what the problem with that argument is?
The rest of the company's
$7 billion in debt. Well, we didn't consider the debt, Fast Money guys. Well, if there's $7 million in debt, and you saying you're getting, $6 million for if the rest of the company is, worthless or in trouble, and you got $6 billion in equity, and then you got $7 billion in debt, well, you pay off your debt with your equity, even if you can sell that real estate. And I don't know if it's worth $6 billion anymore. You're still $1 billion in the hole, and that's a zero then. So you got to hope the company turns it around. I don't care. You can't just say, oh, if Macy's folds up shop, we're gonna have $6 billion. No, Macy's folds up shop, you owe $7 billion. So it doesn't work that way. You got to pay your debt holders off. So you need Macy's to actually turn around their business. And I don't know if it's going to turn around. Could they, do something fun and, spin off the real estate assets, do some, financial engineering to help them out? Maybe. Maybe that's an outside chance. But there's an 8% dividend here. Macy's is telling me they're 8.01 now. This dividend is getting cut. In my opinion, this dividend is getting cut. It's just a matter of time.
I'm buying the GE when Deutsche Bank comes out and says buy the GE, because they have walked this thing down from the $28, $29 level. So that's
we made fun of them, man, just because they gave the call 3 days in a row. They're like, don't forget, GE. They were reiterating we should be listening to Deutsche Bank. Whoever was that analyst, we need to get him on the show, and we need to say, hey man, we made fun of you for calling it out 3 days in a row. We should have been listening to you. You were all over this thing at $29. The first analyst to say that they were going to cut the dividend. Now everybody's talking about it. When that analyst gets bullish, that's when the bottom of G is going to be in. That analyst is smart. Whoever that Deutsche Bank, who is it, Spencer? Can you go look up the analyst's name, and we can give him some props
right now live, Spencer? Come on.
We want to just give him some props because he gave this to us on a silver platter. I should have been listening. I should have dumped my GE the minute he spoke.
It was like 2 weeks ago, right?
Oh no!
It's like 3 months ago.
Yeah, he's been. It's
like 28, 29. He's been pounding the table. He might have said it again 2 weeks ago. Maybe it's a she. It could be this pretty good girl analyst out there too. So find out who it was. It was touting and saying they cut GE to a sell originally. I think that was the original call. You'd have to look at Deutsche Bank analyst on GE and the Pro. And the nice thing about the Pro is they carry this information for you. So Spencer will go hunt. We'll find that information for you. I want to know that guy's name.
Okay. All right. Just for Macy's, a big decline from the $22 area. Who was it who was the retailer? Oh, was it JCPenney that long ago that I think JCPenney was on Friday. I don't know what hit this thing on Thursday. Just keep an eye, 1862. That was a low from yesterday. That was a low for the move.
Yeah, and if you look at these retailers, holy cow, you look at the Macy's, you look at the Kohl's, you look at the XRT. The XRT is in full breakdown mode here as well. I mean, let's go and talk retail right now. Under Armour. Ooh, ow, ooch. Spencer, details, UA.
First of all, the Deutsche Bank thing, the call was back that was May 31st.
May 31st. Look, where was the stock May 31st?
Oh.
It was at... May 31st stock was around $28. And what was the call? What was his name?
Oh no, I didn't get the name yet. I just got the date that I'm still hunting down the name. But here, all right, let me pull up the headline again. So it was May 31st. We're looking at not GM, looking at GE and Deutsche Bank, and it was an analyst. It was just a headline that we had May 31st. Here we go. They're out negative on GE. They're saying the stage is being set for the company to cut its common dividend as part of an earnings reset, lower and possibly eventual future leadership change. Well, the leadership change happened.
They popped it on that news too, on the leadership change. But
that was the selling point right there.
Yep.
Yeah.
All right.
It looks like John Inch, Deutsche Bank John Inch. I just counted it down. So yeah, it's Deutsche Bank's John Inch is his name. Inch. double down on the sell rating he issued on the stock. So yeah, John Inch is his name. So congratulations, John Inch.
John G. Inch, if that doesn't work for you. But yeah, that's what I have in the Pro too. Anyway,
when John G. Inch speaks next time, I'm going to listen.
Okay. Under Armour earnings. Q3 GAAP EPS of 12 cents. Adjusted was 22 cents versus a 20-cent estimate, so a 2-cent beat. Sales of 1.4 billion versus 1.48. They did, however, cut their fiscal year EPS guidance in half. It had been 37 to 40 cents for the fiscal year. Now it is 18 cents to 20 cents. So
cutting your guidance in half is not what the market wants to hear when they're, you're in this hard downtrend. And all they have to do is not, completely, I won't say it, blank the bed. But they did. When you cut the guidance in half, that is equivalent of, so the scenarios here when a stock is trending down to earnings, just to recap. If the stock, is, heading down into earnings, for exact opposite of the scenarios heading up, all they need to do is kind of come in line, say guidance is okay, and, you'll be okay. So there's multiple scenarios where the stock could be okay. If they come in and just, say something bad about guidance or cut guidance in half, stock's getting killed. I don't care what the chart looks like. And here we are. It's down 14% now here in the pre-market. It's down $2. Under Armour here at 12, whichever one you want to look at. UA is 12.65, UAA 13.66.
UAA is the more liquid one.
Are they? Well, they're both very liquid. They're both trading 1.9 million, 1.4 million shares. So you can pick your poison there. But both of them have been poisoned to investors here over the course of the last 2 years. Stock topped out, if we look at the UAA chart, back in April 2016, up at $47 when everybody had to own the 55 PE retail stock. No longer. It is now, its PE has come down a lot, but the problem is the earnings are falling so fast that the price can't catch up.
Under Armour, I'm looking at UAA here. 13.45 is your pre-market low, called 13.46. Only 23 cents above that. Not seeing a lot on the monthlies. If you go back to April.
Are these all-time lows?
No, it's not.
Oh, no, it's 2011. You're right. 2011, 2012 are $4 or $5, $6.
Yeah.
Wow. Still some meat on that bone.
Yeah, for UAA, if you're really holding out for target, I don't think you're going to see your April 2013 low at 12.57. Big windfall for shorts, 13.46, near a half number as well. So trying to get off the mat. And then for UA, let's look at that down in the pre-market as well. 12.40 is your pre-market low, 30 cents off that. And then that. This one they just kind of they just start the chart going back from March of 2016. But pre-market lows of both of those, better place to cover a short than to try long.
Jump over here and continue on the earnings parade. We're still waiting on MasterCard. They usually come out at 8, unless they came out.
No, I think they came out.
No, did they come out?
No,
we're out. MasterCard's out. Yep, $1.34 versus $1.23. Sales of 3.4 versus $3.28 billion. So a beat on both.
Been such a runner. I mean, it's good numbers, but this has just been running and running and running. I own this in my investment portfolio here. Sticking with it, I've been from $16, so I'm up at almost 1,000%. So I think I'm going to stick with this one. But $150.50 here right now. It's popping. But I am concerned that this is a scenario where you get these companies that have been running up so much into the report that they actually sometimes can get hit on okay earnings. It's up $1.55 right now, but I'm not chasing is what I'm saying.
$2 off the high, Dennis. 152.50. That is your pre-market high. Currently hanging out at 150.50. So you got to get back $2 off the high. Let's see if they run it back up to that 152.50. Really, your best number for today, 150 over, even below yesterday's high. That's interesting. 152.50. But folks, let's see what happens in 151.48. That was the high off the Kramer pump yesterday in the open. You opened 151.30, 151.48 high, and then you sold off almost $3. I just missed it by $2.90. So 151.48. You're going to have to work through that number in order to get to that pre-market high.
In the chat, they're talking about the Kellogg report, which was a good one, actually. Fuzzy's saying great earnings, and I haven't seen the actual report, but I tell you, the stock's trading up $2, so it must have been pretty good. Spencer, details on symbol K.
Q3 EPS $1.05 versus a 94-cent estimate. So
Nice.
And beat sales of 3.221 billion versus 3.21. So a slight beat there on the sales. They are also reaffirming their fiscal year sales outlook. Sales will be down about 3%. EPS growth will be between 8 and 10% year over year.
That's all you have to do when your stock went straight down into the report and it's going the other way. And you know what? I actually wanted to buy this last night. I actually had it for a bit, and I was like, I don't know. I'm just scared to hold it through earnings because it's a food stock. But last night we had Mondelez report, and the report was okay. But then, the stock really popped on it because, again, straight down to the report. They weren't saying nothing, fantastic, but it was good enough because the stock was down to the report. And I'm going to say this on K2. This is a good enough report, and that's why the stock is trading up $3. They've been hated. Is this going to lift the food stocks? I mean, all these food stocks, Joel, are near 52-week lows. You can look at General Mills. You can look at Campbell's. You're a buck off the lows there, too. You can look at, Kellogg's obviously was a 52-week lows. Tyson Foods, which is actually getting a ratings change, has actually went the other way here, and it's in breakout mode. This TSN chart has been moving here, actually. Full disclosure, I do have a small position in TSN from the long side, and they actually got some ratings action from who was the analyst last night? Tyson Spencer. Somebody said something overweight rating. I forget.
Let me pull it up. I got so many on my list here. Last night it was KeyBank.
KeyBank going overweight on Tyson. That's a breakout. Tyson Chicken, look at that. They've been actually leading the charge of the food stocks there. But, you got Kroger in the gutter. You got, the ones that obviously sell the food there. Who else did I give any love to? KHC is another one. Kraft Heinz was just breaking down yesterday. It's lifting in the pre-market as well because Mondelez and Kellogg both report okay quarters.
I mean, people are worried about Amazon going into private label, and selling their own food. And who knows when or if that will happen. I just want to alert our traders here. We are taking off in Kellogg's here, 61.75. That's a huge move for a food stock,
yes.
$2.80. Yes. So I don't know. What I'm going to keep an eye on here, especially with the overhead supply, you got multiple lows just at the multiple highs at the $62 area. 1, 2, 3, 4, 5 days in a row. That's a potential resistance point. Of course, you could sneak into the 62 handle here, but man, if this thing got up to what's that double top here? 62.50 area, call the whole number, 62 even and 62.50. I mean, a lot of people underwater here. Also, keep your eye on your high right before the bell, but just too much, $3.
It is the consideration. Both these stocks, food stocks look like they're going to be strong. I'm not chasing any food stocks, though, because these things were just hated as of yesterday. So I don't want to chase something that's trading up $2.50, but I'm taking note. If I can get some of these other food stocks on the cheap today and these stocks hold their gains, that might be a sympathy play there for you. And sympathy has been tough lately. We've been talking about that a few times on the show that, traditional sympathy moves where a stock moves, with another one in the sector has been working as well as it has in the past. So that is just one consideration. But I tell you what, it worked with Kellogg's. We were following the Mondelez report from last night. Let's jump over here. Where do you want to go, Spencer? There's a lot of earnings reports here still. We didn't talk Mondelez. Do you want to give them MDLZ numbers just because we're talking about it?
Yeah, we're doing food, so let's do Mondelez. Yesterday after the bell, 57 cents is a 3-cent beat. Sales of 6.53 versus 6.45 billion dollars. So a beat there on the sales and a beat on the EPS. They see their fiscal year organic net sales growing about 1%, and they see double-digit EPS growth for the fiscal year.
Yeah, I just look at this, though, and kind of $42 jumps out at me. Yep. What do you think, Joel?
Yep. Pair of highs, actually a trio of highs, 41.81 to 42 even. This was earlier in the month, but you know what, Dennis? It's right here, right now. Is it bid there, 41.90 offered? How's it?
No, it's wide. It's really – actually, no, it is bid. Somebody just bid 41.80. Wow. So it's up there. So you can get near here. It's hard to fade stocks when they're moving because it's such a momentum market. We've talked about that before here too. This sector was, getting hit, but we haven't really had, a lot, there's not a lot of information. Like with the drug stocks before, and, we can get to Pfizer in a second, you saw drugs getting hit on good reports. We just had 2 reports here only. These are the first 2 food stocks from the food stocks, or reports from the food stocks. So we haven't really seen a regular session yet to see if they're going to actually give some of these gains back. So jury's still out here. That being said, 42 looks huge to me.
Yeah, and you keep an eye on that, trading right at the highs of the pre-market session. Street leaning the wrong way going into this report, at least for now. So we'll keep an eye on that $42 level.
Let's go to Pfizer. And here's a stock that actually was trading up pre-market on a pretty good report. They've given it all back.
Ooh.
Why? Because it's a drug stock. This report was fine. Spencer, give us the details.
Yeah, it was fine. 67 cents is a 3-cent beat on the EPS. Sales of 13.2 versus 13.19 billion. So a slight beat, but basically even on the sales guidance for Q3 fiscal year EPS outlook, it was being raised from $2.
They're not good enough.
They're raising it. It used to be $2.50 to $2.60, and they're raising it to $2.58 to $2.62. So I guess is it enough? I don't know.
I mean, you can look at that and you can say, "Wow, this is a pretty good report. What's going on?" Tell you what's going on. It's a drug stock. We saw Merck's numbers were not that bad, and everybody's trashing Kramer's trashing Merck last night because they're chasing price. But, it wasn't a terrible report, but it didn't matter. It's a drug stock. We're going to kill you. Biogen's numbers weren't that bad. Celgene's numbers weren't like terrible. I mean, and they just murdered them. So it doesn't matter. When you're a drug stock reporting, it seems like in this quarter, unless you're AbbVie, which, got a pass, and it actually is not really up much from its report either. If you've been shorting the drugs ahead of the earnings, you've been making money. And you've got to identify those trends. As a day trader, as an investor, it doesn't matter as much. But if most of our listeners are short-term swing traders, day traders. If you can identify the trend in the earnings early, like what's happening to, stocks in the sector on the earnings report. Just like we said, the financials. This was the first thing that tipped it off, and we said it from the last quarter. Financials were having good earnings, and they were hitting them on the earnings. Well, here you are. Pfizer, same story. And there's some sellers coming into Pfizer here now, and I would not be surprised here if Pfizer ends up having a pretty crappy day on an okay report, just because they've been doing that with drug stocks. And people take note. Traders take note and stuff, and they just, it sounds, ridiculous, but, that's what people take clues from, and their traders will speak and traders move stocks.
And Dennis was out there at 37 even when it printed 36.93 because he.
Are you kidding me?
I'm not kidding.
This thing printed 36.90. What time was that
at? Let me see here. It was this morning.
Well, obviously it was this morning.
35.94. 35.94. That's right. It came out this morning.
35.94 or 36.94?
On both platforms, I'm seeing 36.93 and 36.94. At 7 a.m. this morning, right off.
No way. Yeah. And you know what? And I slept in today. And I honestly thought about getting. Yeah, I know. And I was trading late last night. I had my kids, and there was a lot going on. And I actually said, you know what? I'm going to sleep in. I didn't get up till 7:10. And I got to my desk and did the news and figured everything out. And obviously, I should have been up before that because I would have been shorting with two hands if I, or at least looking at that. But That's absolutely ridiculous. If it really traded up at 36.94, that's absolutely ridiculous.
Chat, will you please help me out? Dennis is not believing me here. But
that's unbelievable. Who buys Pfizer after all that up there? Man, that was free money up there. Now it's flat. Now it's down. And stocks go and give back all their gains, go to flat. They often continue going lower, in my opinion. So that's just my opinion. Pfizer, I've still got it in my long-term investment portfolio. I've had it in there for a decade. So I'm probably sticking with it long-term. But short-term, man, drugs are out of favor.
36.78 was your high just back on October 23rd, so that was a good level. I just want to alert our traders here, $35. Under $35, I think we're in a world of hurt here. You see your lows at 35 back in September. You've held out. You've bounced 3 or 4 times. Man, a hard 1, 2, 3, 4, 5 day, 6 day sell-off. Tell me what you see between 35 and 34 half, 34, 36. So it's all about 35 and 5.
Got to hold 35. Yep. Doesn't hold 35. Katie bar the door.
Okay.
I used to your saying.
All right. Spoo's up 5 points, 73 even. Actually up 475. Just hanging out here at the highs of the pre-market session. We're going to get some imbalances here in 15 seconds.
Yeah, you know what we are, and that's why I might as well wait here just for a second. We're going to get these imbalances here. 10, we're counting them down here. 9, 8, 7, 6, 5, 4, 3, 2, 1. What do they look like? They look... Nothing really huge here, actually. It's surprising for once. General Electric, I could say, has 174,000 shares to sell, so that's normal. Baba has 97,000 to buy, so that's normal. Square only has 16,000 to buy. The book's kind of littered with some sellers there, though, so I think that buyer might still be there. I think they might just be holding it down. Pfizer 61,000 to sell, and actually it's just went. Well, it is negative still here after trading up to $1.50 on the ridiculous print, up at 36.95. General Motors 54,000 to sell. GM having a really rough day yesterday, obviously, because of the
Goldman Sachs.
That downgrade. Let's go over here and look at some of your earnings stocks here. Look at Under Armour, UAA. Yeah, both those. 50,000 to sell in Under Armour, 32,000 shares to sell in UAA. Jump over here to Kellogg's, just looking curious on the food stocks. Nah, 6,300. It's too early. So they're pretty small, actually, right now. We do see the big seller in GE. That seems to be there every morning, though.
All right. Just look at Kellogg. Let's see what it's doing here. We're talking about that $62 level, 61.75. We're just hanging out, a couple green bars. Des, before we move on to our next stock, we got Nick Shaheen coming up in 4 minutes, the author of Create Income with Option Spreads. Just take a look at this Goldman Sachs chart, Dennis.
Sure.
Had a good report. And some of these other finances are running, but it looks like you've just hit a major wall at the 245 to 246 area. Trading range here, I mean, you think you'd be getting some more follow through on this thing, especially as strong as the market's been. Goldman Sachs, I'm keeping an eye on the double bottom at the 239.50 level, but really not acting great after the report.
Kind of digesting the report, maybe you could say. Actually just traded an odd lot up at 242.50, but I don't know. Like, you've got some like Bank of America that are breaking out to new highs. JP Morgan broke out to new highs. Citigroup did not make new highs, but we know it got hit hard on its earnings report. Wells Fargo's trying to get up there to make new highs, but it still can't get back to its July highs. Goldman's way above where it was in July, but it's not where it was just a month ago. So I don't know. I think it's just in a range here right now. I'd say 235 on the low end. If it gets up over 246, maybe it'd be in breakout mode yet, but kind of in the middle here of everything. So I think it's an SOH trade for me on this one, which is sit on hands.
All right.
Pfizer's under 35.
Yeah, boy. This, I mean, just look at what happened in America over the last couple days, and
that's why I'm scared on the drugs. I mean, I wouldn't be chasing something up $1.50. It's a drug stock. You gotta know what you're chasing. And there are a lot of people that probably ring the Pfizer when it was trading 36.95. That was a new 52-week high. Every drug stock is in shambles here. So gift. It was a gift for those who are awake at 7 a.m.
All right, now Merck just kind of hanging in here at the 54.80 area. Low from yesterday, 54.41. Big stock, trades a lot of volume. Let's see if that low can hold. Maybe put in a double bottom. Above 56, you got a lot of air, but man, you got a lot of people trapped here. This thing traded between 62 and 66 for months and months, and they get a pop on the Keytruda thing, and then they would come back down. Now they took that off the market, but 54.41, that's an important level for Merck.
Jeffrey's upgrading it today just to neutral, though, so it's not getting much of a pop off that. It's more of it just like we were right. I think they had a sell on now. They're just raising it up to neutral. Didn't change their price target. The price target was $55. So just, chasing, well, not even chasing price. They were just, correcting to where, they actually were right on that call.
Just sneak one more.
I forget where. Oh yeah, we didn't talk the Burlington guidance.
We had guidance from Burlington last night as well. They came out and they raised, not scheduled, but they came out and they raised their Q3 outlook. Their adjusted EPS was 58 to 61 cents for Q3. Now it is 64 to 66 cents. They raised their Q3 comps as well from 2 to 3% to just over 3%, and that's it right there.
Stock is trading up here in the pre-market. Burlington has been getting a pass. I mean, all these other retailers, we know these stores are what they actually still like. They're big discount stores where everybody's getting stuff cheap. And that's what, the consumer wants. We know TJ Maxx has been the same thing, which is TJX. It's been getting a pass here too. If you've owned a retail stock, these have been the best ones to own. None of them have been great. All of them are still significantly off their highs. I mean, Burlington's highs, BURL, we're talking, was up over $100, $104 back in May. So you're still talking about a stock that's 15 points off its highs. That being said, when you look at all these other retailers and they're just absolutely annihilated, it's held up pretty well.
All right, not trading a lot of volume. I see a 92 print and a 91 print. You had a little congestion. Just look at the dailies here at the $92 area. There's a couple highs, 91.71 and 91.73. And then I don't even know if you could get too excited, even if you bust out above there, because you got another double top to deal with at the 92.80 level. So we'll see what the resistance look like. If this thing comes back anywhere near 88, which I doubt we'll see today, good support at the $88 level. All right, you wanna bring Nick in on the fly here?
Nick should be in on the fly. He's flying in.
Good morning.
Nick Shaheen, the author of Create Income with Option Spreads, joins the show every Tuesday at 8:35 or 8:36 if we're running late. Nick, how you doing today?
Doing great. How about you guys?
We're doing okay. We're just covering all these multiple earnings reports, but you're our fundamental guy here. And we were chatting yesterday when we had the big sell-off, Nick. I hope you didn't get hurt too bad. We went all the way down to 65.5 yesterday. And taxes. That's the word. 2020, 2021. I know you analyze the fundamental information out there. Tell us what you think about that news from yesterday.
Well, the debate, I think, is whether what's priced in, if anything is priced in. The answer is kind of yes and no. I mean, since the election, obviously they priced in everything all at once. And then after the fact, they didn't chip away too much at the fact that we lost one after another as far as promises. They seem to be latching on to this tax thing as a representative of most of them. So right now, you could argue that nothing is priced in. If we dipped yesterday on the fact that we may have a delay in this, or we had misunderstood the zealousness that we had the other day. So it's kind of confusing. To me, nothing is ever priced in fully. That we will continue to celebrate any good news, even if it doesn't happen, even if it's fake, until it actually happens, and then we celebrate it one more time. And if we lose it these days, we only dip a little bit. We rally, umpteen days in a row, and then we lose something good, and we drop a little bit.
Any targets? No. Oh, I'm sorry, Dennis. Were you going to hop in there?
No reason to short based on what I heard yesterday. Let's put it this way.
Okay. All right. So what is on your radar for today, Nick? A lot of earnings reports. Let's start with the Nick Shaheen lotto plays. Did you have any of those going today? Let me guess. You were short Under Armour.
Well, I wasn't, but I told somebody not to go long it because they were hoping for a surprise there, and I said, usually I like to see them prove to me that they can surprise me one way or another. And Under Armour seems to can't get out of its own way. Every headline I read is bad this, bad that, or they were supposed to do this but didn't do that, and now they're talking they want to bail out of some sports or not. So, why bother with this? I mean, you have sure things out there. Why don't you bet on the sure things versus the iffy thing that is got a binary event coming? So that makes it doubly iffy. So you're just literally betting on something. And as long as it's that what you want to do for that, it's okay to do that here and there, but it's not okay as a method of investing long term.
So no selling puts in this, Nick. No matter.
No, that is not a right stuff unless you want to own the stock for some reason. But I don't know the stock internally. I read what I read, I hear what I hear, and it's not telling me that okay, you can bank on a floor here. That's when you sell puts. Like on Apple, for example, to use the obvious one, I can calculate a floor mathematically, and I can bet on that floor. And Under Armour, I have to contend with all the issues that may or may not have in the future.
All right, you mentioned Apple. Let's go to Apple. Boy, what a continuation move from Friday, selling out the iPhones, Nick. And kicking myself again. I think we had that gap down day, and that was all because of iPhone orders. 155, we touched to that had been a former support level. And I think this could be a Nick Shaheen quote. You said, if you want to go lotto, pre-earnings, Apple, this is your opportunity. Did you get a chance to pull that one off, Nick?
Well, we did. I mean, you and I have talked, and we've sent messages back and forth, and you've seen some of the chat room talks there. I drew upside potential in Apple in purple, kind of a cup and handle, and that one candle gave me a full, complete satisfaction of that upside potential. But I gave the option to either buy Apple directly on the Google and Amazon earnings and Microsoft before they reported. I said, it's a lottery ticket that you can hold, or just throw a blanket and buy the Qs. And I did that. And I did book the Qs in 2 tranches, one on the day of and some yesterday. I will revisit what I did yesterday as far as bookings and re-engage. If I want to play Apple, I'll buy the Qs just because it has about a probably 0.18 influence. So a 1% up and move in Apple is like a 0.18-ish, 0.15 to 0.2. I can't calculate it exactly. I'm just estimating on the triple Qs, for example. So it influences the market, let alone the infectious effect it has on Facebook, etc. So Facebook reports first, right? So if you want to bet on Facebook, I buy Apple calls. If I want to bet on both, I'll buy Q calls or both.
What about FANG altogether? Because 2 days ago, we saw all this money roll into FANG and roll out of everything else. As I'm talking about Friday. And if I know you have your nice FANG chart, which you put the Facebook, the Amazon, the Netflix, and the Google all together as one. What are you seeing in that chart right now? Because it's like obviously just blasting off into orbit.
Well, it's in the stratosphere right now, a big gap on a monster move. I mean, the moves we saw in Amazon were just wow. A stock this expensive, this frothy, this high in ticket, moving that much is just unbelievable. And I think why would anyone want to short it unless you're actually putting a short on the market in general? These are the strong stocks that are performing well. And even though Amazon's valuations is expensive, but if cover up the name and trade Amazon because it's a startup. If you think about it, you keep hearing it's going into this business, it's going into that. These are startups.
Into everything eventually.
Well, these are startups, and they're not bleeding cash. They are profitable. They borrow at cheap rates now, and they're setting themselves up to not just compete, to actually dominate and kill industries. Bad for the industries, good for us consumers. So why would anybody want to short that stock? Unless you say, okay, markets are going to crash, I'm going to short it by shorting Amazon. Yeah, it will run faster downhill. But if markets are not correcting, I wouldn't want to short it, even though it might fall. I just want to stay away from shorting it. I'm not saying go long it, just don't short it.
I mean, how do you really put a cap and say, okay, well, the revenue, how can they keep growing? I mean, they go into every industry. So if they continue to just, go and, they're going to eventually sell everything.
Well, why not?
If they don't already sell everything, but I mean, they're talking to get into the drugs now. I mean,
they also are kind of a repository. They're like a consignment store. A lot of the stuff that Amazon sells doesn't carry. I mean, there are a whole bunch of sellers on there. I know. I have family members that sell their stuff on there. So I just threw in a long-term monthly chart for Amazon. People still call it speculative, or they say it can't sustain this too much longer. Well, this is 10 years of sustainability of chart. It's not just like speculation on chart like Bitcoin, where it's faith in Bitcoin. They are actually delivering proof to their success is the detriment of other stocks like Macy's, which have gotten a serious. Macy's is back to levels from the 90s maybe. So that's proof that Amazon.
It's the opposite of the Macy's story,
right? Exactly. No, it's just tangible proof that the behemoth that is called Amazon is actually succeeding in. This is one sector result.
Yeah, it's scary actually when you think about from a jobs perspective, from an everything perspective. But
yeah,
you can't argue with it.
I keep saying, can you imagine Apple in the hands of Bezos instead of Tim Cook? I am so disappointed with Tim Cook. When they came out with the Apple Watch,
that's a great point.
Yeah, when they came out with the Apple Watch, just look at the balance sheet. People just say, "I love the balance sheet of Apple." Yes, they have a ton of cash, but look at the debt ratios. They were zero debt, I think, in 2012. Zero long term, zero. Now they have $100 billion, maybe more. I don't know.
Well, they're doing that because they said, "Oh, you're borrowing cheap. Why can't why aren't you borrowing? Why aren't you adding a little bit of leverage to your portfolio?"
Borrow and buy something that produces revenues for you. Don't give it back in dividends. That's my point. Yeah. They came out with a watch, and I thought, oh my gosh, I'm going to be wearing a watch that's going to save me from having a heart attack. Because it's going to keep track of my vitals. It's going to give me an average of mine, throw it against all the other ones that are out there that's collecting intelligence on, and tell me, hey, people with your salinity, your heart rate at this point, your body temperature, and your physical activity based on the movement in the gyroscope in it, tells me that you should relax a little bit, or you should get up and move a little bit because you're X percent in an X spot of having a heart attack. Well, where is it?
Joe C goes a little contrarian here. What happens when the other competitors go away and all you have is Amazon? That's not great for the customer.
It is great for the customer. Everything is cheaper on Amazon. Okay. Period.
All right, let's move away from Amazon here and let's talk Celgene here. And Dennis got down and dirty in this thing when it was under $100. Was this, a big fall? Kind of got whacked on kind of 2 rounds of news here. Biotech's really in the gutter here. Any thoughts on Celgene, CELG?
Yes. Technically, if you look at a weekly chart for 5 years, it's at a zone where 90 to, 94, 95 eyeball. I'll throw a chart in a second. Has been support for that time, or at least has been in contention for that time, has been support since 2014 October, so 3 years ago. And it was resistance in 2013. They banged up against it a few times and then broke out from it. And they're now have been using it as support. Now, I haven't seen candles this big in Celgene in a row. So you have to respect that. What do I mean by that? If I don't know Celgene's fundamentals, I'd want to know exactly why it's falling and if there's reason for it to continue as far as fundamentally speaking. Technically speaking, it looks good for the recent low of whatever, 94.80 or something, to hold as support because it has held for years.
Yep, it sure has. All right. Tesla. No, that's due to report here. Chart hasn't been pretty in Tesla. I know you were maybe sniping on the long side here in Tesla. I think they're due to report in a few days here. But it's all about the car deliveries. Nick, tell us about the Tesla chart.
I did lose some money on a lotto called Butterfly, which I rarely do, and I went with instinct. And it's an earnings trade. I meant to take it off before the earnings. I don't like to do flies into the earnings because they're kind of a thread the needle trades. Tesla had technical breakdown potential in it, and but it also had a shorter term technical upside potential in it, which it didn't live up to. So this is the downside potential, and it filled it kind of a head and shoulder once it lost 335, 334. But on a 120-minute chart, it showed that it was tight and it was ready to move up. But it failed at 324. I was hoping it wouldn't. I kind of jumped the gun, which is kind of my fault, into earnings. I don't underestimate the mojo that Elon has. Everybody has a crush on Elon on Wall Street, and he's going to say something. Yes, it's a car company so far, but the long thesis on it, most people that are excited about it, they tell you it's this kind of story, it's roof tiles, it's that. It's so muddled that he'll probably be able to open the door on something vague and ambiguous to cause some buying there. But, technically it failed to break into the upside, but earnings, that's what they're for. The short-term reaction, flip a coin.
Exactly.
Nick, Buy Apple from the chat wants to know about Alibaba, BABA, and this stock has just been a monster. I think it's a buy on every pullback here. It wasn't from the recent pullback just from 3 days ago. What are your thoughts here on Baba?
I agree, and I thought I had a long play on it on the dip, but I looked at my portfolio. I was like, wait a minute, where is it? Either I didn't get the fill on it, or I plumb forgot to do it. So yes, obviously it had a great bounce. 184 would be the bogey to take out, and then there's no reason why it wouldn't hit 192, provided that I think earnings are coming up, right?
I think the second.
Yes. So again, short-term reaction on earnings is completely binary, but I don't think they have the tendency of falling on earnings. So Baba long lotto in a conservative portfolio, taking a lotto here and there as a bet, because literally that would be a bet, is not a bad deal.
All right, one final one for you, Nick. AMD has just been getting annihilated. I know you. I remember you talking favorably about Intel before. I don't know if you were able to hold on to that one, but what do you say to bottom fishers in AMD?
Okay, so number one is AMD. Yes, it's fallen. What is that? Eyeball. Holy cow. That is
a lot.
25% or something like that in just a matter of days. But if you think about it, just think about it. 12 months ago, it was $7. So who's to say where the floor is on this? I think it runs in the red, right? Fundamentally. So I can't come out and say, okay, this is a floor, this is a floor. Now, having it here where it is at, I don't know what it's doing this morning, but as of yesterday, it was the low was 1065, something like that. I look back to the last time it bounced below that, and that would be 10.1, 10.2, and it's done that twice. Once on volume on an earnings report back in May, and the other time on the prior report, just before the prior report. So just under 10. So look at 10 as potential support, but if that is lost, 9 is the next eyeball level, and below that, just open the door, I guess. Again, if you want to short the market in general, there's a good place. I mean, there's plenty of froth left in this stock. Not to say it's going down because of it, but it's not a sure thing to grab right now as a falling knife.
We've been on the line with Nick Shaheen. He is the author of Create Income with Option Spreads. Joins the show every Tuesday at 8:35 to give us his technical and fundamental outlook on the markets. Nick, I got that down pretty good now, huh?
Yes. Perfect.
All right. Speak to you again next Tuesday. Thanks for the input, Nick.
Can't wait for it. Thanks.
All right. Dennis, you holding on to your AMD? What's going on there?
Oh, yeah. We aren't talking. We might forbid, talking about AMD now on the show.
One thing about you, Dennis, you talk about your winners and you talk about your losers, and you could do it.
I talk about my losers more than my winners, I think, because I like to complain. And all you guys are my sounding board. Thanks for listening.
All right. Dennis, did you get anything? Did you get out there in Kellogg? We were talking about that $62 area. Didn't quite get there. 61.89. Starting to get some volume coming into this one. So keeping an eye on Kellogg. And this is not for Spencer or Dennis. Chat. Where is Kellogg headquartered? And don't Dennis or Spencer or Brent, you cannot answer. All right.
Yeah, Troll asks us every time it reports.
I know.
Chat, you should know this by now.
All right.
I actually remember this time, but I'm not.
Okay, we're waiting for the answers from the chat. Well, somebody's Googling it really fast.
Well, let's move on in the meantime. We have a couple other earnings. I don't know if you want to discuss AK Steel. There's a couple more or anything else that was on your list, Dennis.
There's a lot. I just want to give a quick imbalance update, though, because they've grown. They've all grown here. GE now 344,000 sell. Alibaba, 188,000 to buy. It's like clockwork around here. Square is now up to 39,000 to buy, but not as big as it normally is. Twitter, 132,000 to sell. That sell and bounce was there yesterday in Twitter too, so that could be the start of a trend. That's a 2-day trend for Twitter there. TWTR was a stock. I actually tried to buy that yesterday off the open because it opened down. I was like, you know what? I was saying I think there could be follow through. Shook me out though. It went straight down. It kept going straight down. And then I actually got back in and I rode that little ride up there to like 2150 for a little bit. Actually ended up making a little bit of money overall on it. But what are your thoughts here on Twitter? Because, you've had a big move here. Now, you have 2 days in a row. We've seen some sell imbalances here. Do you think there's some people that want to ring the register here? Or do you think this is just a temporary pullback and the path of least resistance is now high?
Boy, I don't know. I'm just going to give you a good number here, or pair of numbers. 2196. We'll throw that out. That was on the earnings day. Things got a little carried away. But you had a 2168 close, right, Dennis? And then yesterday you got above that, but only by 9 cents, a high of 2177. So we've talked about how you can have the high of the move where maybe not that much stock trades, but then you talk about the mark. And right now, everyone that had this thing at 1750, 1850, these institutions are looking at the mark of 2168. We closed at 21 and a quarter. That's what you got to take out. If we get above there, then I think we could take out the sellers at 22. But just not really consolidating enough to say it's ready to blast higher. But I'm really looking at that 2168. That was a high close of the move.
The other stocks that I had on my list to talk about was Lumber Liquidators, LL. This stock is getting the beats a little bit in the pre-market. It's a stock that we know has come a long ways back from the whole formaldehyde issues here. Just been meandering really since last quarter. Had the gap up and kind of just hung out. Now it almost looks a little head and shoulder, especially since you take out the neckline here today. Spencer, what were the details of the report?
Q3 EPS of a 66-cent loss, sales of $257 million versus $261 million estimate. So a $4 million miss on the sales.
LL getting the hit. Joel, technically speaking, what are you thinking on this one? Because we are getting into a gap here.
I know. I would say this one, haven't looked at the pre-market chart yet, but I'd say if it takes out 34, look out. And look out. It went down to 31. Holy smokes. All right. Well,
smoked it.
Man, oh, man, oh, man.
34 is resistance now.
Oh, yeah. That's what I was going to say. Maybe I'll put this up on the chart, up on the screen, up on the front page. And if it gets back up to 34, have a mound of sellers there. So let's keep an eye on that one. And then another one, I know we're jumping around here, but another one I've been keeping my eye on is your favorite shoe company, Dennis, Skechers. And I had that.
I got a pair of Skechers.
I had that crazy run, and I'm looking for this thing to break down. It hasn't done it yet. I don't know if this Under Armour news will do it. We're trading down 16 cents in the pre-market. Trio of lows at the 32.60 area. So I'm going to try and stay out of it until we take out 32.60. But man, you got some room underneath that. Skechers digesting the big earnings bump.
1 minute here. If there's a stock you want to talk, because there was a lot that reported, I was going to jump over to Shopify, SHOP. Yeah, that one actually has turned for the worse here now. It was lifting, and I think this is going to be an example of one that's run into the report and now giving it back. Spencer, what are the details? SHOP.
5-cent EPS versus a penny loss estimate. Sales of 171 million versus 165. So a beat. They see the Q4 sales guidance coming in higher as well. $203 million as the estimate. 206 to 208 is what they're seeing for the quarter.
Ran up 20 points in the last 2 weeks. That is concerning when you're reporting. You got to blow it away. Sounds like they kind of did, but not good enough. Stock lifted. It was trading in the green last night. It was trading in the green after the report. It has now turned to the red. So this pattern that we keep seeing of stocks that have run up into the report and getting hit after the earnings report is still holding true for some stocks. I guess it didn't happen with Amazon, but Amazon wasn't running up into the report either. So if we look at the chart of Amazon, it was just meandering before the report. The ones that are running up need to blow it away, and it did not blow it away.
And this also got Citron, right?
It did.
Yeah, not too long ago. Andrew was able to cover short here. Came back up. he had the big pop here off the report, but 107. That's going to be my number here. You had a high right near the 124 area. You had the low of the move around 90. So there's your move. Your 50% retracement is 107. And that's where you're trading. That's what you're holding right now. So I'm sure it's going to zig and zag around that area. But to me, that's important. Keeping the close above 107, if not, potentially drift lower. All right, real quick recap. S&P's a buck off the highs of the pre-market session at 72.75. It's a high 73.75. Folks, we got to get up to 78.50 and get up there in a hurry. That was your all-time closing high, as well as your intraday and Globex high from Monday. Spencer, 9 seconds left. You want to wrap up the show and preview what's on the docket for Wednesday?
Tomorrow we're joined by Ivan Feinseth. He's the CIO of Tigris Financial Partners. Last had him on the show a couple months ago now to debate Herbalife, but he covers more than just Herbalife, so we'll talk about that with Ivan, all his coverage tomorrow on our show. But if you want to catch any part of today's show, you can do so on iTunes, SoundCloud, and Stitcher, or on YouTube by going to any of those platforms and searching for Benzinga or PreMarket Prep. But that is our show for us today, folks. Hope everyone hasn't been spooked too much.
Oh, what are you dressed up as, Spencer?
I am dressed up as Jason Raznick today. And so is half the office. We are dressed up as our boss. And I have the button-down shirt, the jeans, and the loafers, and I have access to some gray hair dye that I will be applying shortly. And so that's the move today at Benzinga. But anyway, hope everyone has fun. If you are going out trick-or-treating with any kids later, have fun doing that. Have a good day in the markets, folks. We'll be back with you on Wednesday.